Good afternoon, everyone. Hey guys, this is Bruce Marshall with Simpler Trading doing the nightly market update for Wednesday, May the 25th. And today is FOMC day. So we had the FOMC minutes from the last Fed meeting today and got a nice little pop out of it. Let me show you this. So this is the NASDAQ. That's the S&P. So we're kind of, this is a day, 1 day, 1 minute chart. So very small time frame. So we're going down, down, down. Big pop up, and we kind of sold off into the close. Here, let me show you what that looks like specifically on the ES. You guys know I like to trade the ES, and especially now. I mean, this has been my niche for a long time, but the ES is kind of the barometer of the overall market. And with this wacky, crazy market that we're in, I would much rather trade the ES than trying to pick beaten down stocks that may or may not recover. So these little red lines right here are when the FOMC minutes were released, and big pop up, big gap down, big pop up, big gap down, big pop up, big gap down, and then we rallied all the way up to 4,000. And I did an end of the day trade there at 4,000, and it was working great. I was, very happy. We've been doing a lot of these end of the day trades because they're working extremely well, and this one worked very well too. But then we started selling off and into the close, as it does a lot of times, because the algorithms hit all the stops and all that kind of stuff, and high frequency trading and all that. It's just the way it is. But the interesting thing is, you see this rally here from basically, let's go 39.30 to 4,000. So that's a 70-point rally here. Guess what? That's 70 points, right? Because, wait for it, Fed's going to raise interest rates more, right? And I'm kind of make a joke out of this because it's not really funny, but that's the way the market is. I don't even know the right word to say. The craziness of the market now is that everybody knows that rising interest rates are not good for the market. Yet we, rip higher 70 points. And we know the reason is that, we're taking out stops all along the way, and there's short covering and all that kind of stuff. That's just the way it works. Not anything new. But to see it described, let me show you this, the SPX here. To see it described by the media is kind of hilarious. Look at this. Benchmark sends higher to Fed, shows possibility of more rate hikes. So you know what happens when rate hikes, right? When rates get hiked, people don't buy houses, and the housing market slows down, and all of the construction slows up, and all the people get laid off, and all of the buying at Home Depot and Lowe's stops, and then all the mortgages don't get made, so the mortgage guys get laid off from the bank, and it's a downward spiral. We saw this in 2008. Not that this is probably going to turn in 2008, but this is not good news. But yet the market rallies, and the craziness of the whole thing, just it's laughable. And let me show you another example that's even more laughable. So right here, you remember when the Fed met last time? That Wednesday, May 4th, Fed met. And they said, and I talked about in the video, this is kind of funny. Bullard said they were open to 75 basis point increase, right? And at the meeting, they said, no, 75 basis points off the table, but we might do multiple 50 points, right? What's that? That's 150. That's greater than 75. And the market rallied straight up. It's a 130-point rally. And then the next day, the market goes, this day it's like, yay, the Fed's raising rates. And this day it's like, oh no, the Fed's raising rates, and the Fed's raising rates, and the Fed's raising rates, and the Fed's raising rates. It's just the lunacy of what's going on right now. I point that out to say that the news is always looking in the rearview mirror. We all know that. Don't try to trade on that, but make your own assessments based on upcoming events. The next big one will be CPI. We got payrolls next week. We got CPI, I believe, is on the 11th. Take note of all these things, that are coming up, and try to make your own decision. Next Fed meeting is on June 15th. So a lot of big things coming up in the near term. Again, the reason I'm kind of going into it a little bit here is that no one can make, I've been trading for 34 years. I can't make heads or tails out of this market. I can't really tell you even if we're going up or down. And that's, I know most people that haven't been trading long or don't really look at charts or anything like that are just baffled by this. This is just nonsense, right? And it's just noise, and it is. So here is that white dotted line right there. That's January 1. That's the beginning of the year. Started out all-time high. Yay, everything's great. And then we just kind of fallen apart, very quickly since then. But the good news is I do think we are possibly finding a foothold down here. I don't think it's the bottom, honestly, but I think we're finding a foothold where maybe, at least in the short term, the worst is over. There are quite a few reasons to think that down here around this 3,800, 3,600 level, 38, 37, 36 kind of level, on a weekly basis, if you look at charts, there's a lot of support down there. Probably won't go, free falling in here. And if we do, we'll have, a couple of these big bounces probably up first, and then come down kind of like this, this trend that it's basically been one way down, but all along the way we've had a lot of big gaps up. So when you're thinking about your trading, I've been mentioning this for weeks and months, saying this is not a long-term investment market. Don't catch the falling knife. Don't think you're going to go out there and find the one stock that's going to go up in this market. We absolutely could rally up, from here, and probably will. But when we rally up, let me zoom in here, just so you know, if you're going to trade this market, that's one thing. We rally up, this is coming on the other side. Rally up, this is coming on the other side. So just kind of be aware of that, and don't think that this is the best buying spot we've had in years. It's not. Wait for it. I would rather be in a confirmed uptrend before I go in and start trying to pick things. So the goal for me right now is to be sitting on a lot of cash and waiting for more opportunities. I'm just not seeing anything. I would throw names out there right and left if I saw anything, but I just don't really see anything that looks interesting at all. So be careful out there. Be stingy with your trades. Don't take any more trades than you have to take, and the ones you take, be pretty confident in them. Stick to trying to trade the indexes if you can, if you're good at that, or if you think about that much. The S&P, the NASDAQ, that is going to be a lot. It's easier to throw a big giant net on an index than to try to pick the one stock again that's not going to go down or may bounce, may not, that kind of thing. So anyway, don't mean to be doom and gloom, and I don't think I am. I'm being realistic here. The good news is I do think we're at least a stopping point. I think we probably could bounce from here, and I think that might last a couple of weeks until we get the next CPI and the next Fed meeting and all that kind of stuff. And then I assume, unless a lot of things change very quickly, being inflation, which ain't going to happen, war in Ukraine, which is not going to happen, Fed changes its tune, not probably going to happen, supply chain problems, probably not going to happen. Unless all that changes very quickly, we're still going down ultimately. So be careful out there and take your profits when you get them, and be very selective on new trades. Just watch and wait. So thanks for the time, guys. Hope this makes sense. Hope it helps, and I will see you at the next update. Stay tuned. Thanks.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me